right. Good morning, you magnificent melon heads. Happy Inflation Day. Today is the day. CPI for the month of October. Market is expecting 7.9% headline inflation. That's the year-over-year number. The month-over-month number is expected to come in at 0.6%. And then the core inflation, which I think is the one the Federal Reserve is a little bit more worried about, core inflation, which strips out food and energy because they're volatile, that's expected to come in at 6.5% year over year and 0.5% month over month. So that's market expectations. That's what all of the analysts polled and surveyed in all their grand wisdom. That's what they have projected. If the numbers come in higher than that, I think the market is probably going to have a bad day. If the numbers come in lower than that, I think the market is going to have a great day. However, be careful, folks. I say this during every inflation day when we get these big data points like a Fed interest rate hike or an inflation number. The markets can sometimes throw us a head fake. We've seen it a lot in the past before. We saw it during the last inflation day, October 13th, I think it was. Inflation came in a little bit higher than expected, and I remember saying, the market's not going to like that. The market was down almost instantly 500 points, and we were joking around. Let's bring in my man, Mish. We were joking around that day. How we doing today, Mish?
There you go. Hey, I'm doing pretty good. How you doing, man?
I'm doing fantastic. Thank you for asking. And I was just talking about how I remember we were joking about doing 1,000-point down spontaneous live stream during the last inflation day. And we almost ended up doing 1,000-point up spontaneous live stream because there was like a 13 or a 1,400-point intraday swing in the Dow. It ended up closing almost 1,000 points higher that day. So, if you're out there saying, if inflation comes in high, I'm going to go throw in a sell order or something real quick, keep in mind, man, the machines take over in those first few minutes right before the inflation numbers come out. And you don't have enough firepower or enough reaction time to keep up with those machines. You're going to get burned if you try to play that game. That's my approach. I put my trades in advance, and I just step back and I watch. Now, last night I was talking on my Patreon Zoom call with my Patreon supporters. By the way, hi, Patreon. Thank you guys for all the support. And I'm going to get yelled at if I don't say it. Hi, Mom. Hi, Dad. I love you guys. But we were talking on Patreon. I covered half of my index shorts yesterday before market close. I just don't really have any strong conviction one way or another which direction this report is going to come in. And I was looking around at some of the technicals in the market, and the market was looking, even though we're near the lows right now, it was looking very neutral. I didn't really get any, my spider sense, if you will. I just didn't get any big inkling that the market was going to go big one way or another. My puts on the NASDAQ, I bought puts in QQQ. They were up 36%, so I took half off the table. I have a little bit of exposure. If the market tanks today, I can still have a little bit of upside there, but I've limited my exposure if the market has a big rally today. So that's one trade I made yesterday. Again, I'm not going to try to trade in the first few minutes after this report. I'm just going to let that one play out. We are right now 8:18. We're about 12 minutes away from the report coming out. What we're looking at right now is BLS.gov. Mish with the you caught that one just in time, Mish. Rapid fire with the mute button. Yep, you made it. Good job. All right. So we're looking at BLS.gov, the U.S. Bureau of Labor Statistics. This is where the report will be posted. I'm sorry, BLS.gov/CPI. And down here in the right-hand corner, I'm going to zoom in on it a little bit, is where we're going to see it. Here we go. It's still showing last month's number right now, where CPI came in for the month of September at 0.4% and 8.2% year over year. So as we get closer to 8:30, I'll be refreshing this one over and over again just to try to get the data as soon as we can. We try to get on it right away and get into it and then watch the market in real time for those first couple of minutes. Now, this is looking at the report from last month. All right. If you're ever interested in reviewing some of these reports, it's a lot of numbers, it's a lot of data, but I can't get enough of this stuff, and I know Mish can't either. Right here in the upper right-hand corner, there's your 8.2% number that I have highlighted. That's your headline year-over-year number. That's the one that gets all the press. And then over here, these are the month-over-month numbers going all the way back to March. And right here is the September number where it came in at 0.4. So today we're expecting a 7.9 in this column, and we're expecting a 0.6. At least that's what the analysts are expecting. Now, Mish, you gave me a slightly different take on this. What's your thoughts?
A couple things before we get there, real quick. Just do a couple house cleaning items. So happy Veterans Day tomorrow to all the veterans. Just so you know, you can go into the Texas Roadhouse parking lot during a time. Please look it up, and you can get a voucher for a meal later. You do not have to eat it on Veterans Day, which is great. Love that for Texas
Wow.
Roadhouse. Secondly, I'm fully rested today, man. I slept for like 15 hours last night. So
Man,
yeah,
I didn't sleep at all. I was on a Twitter Spaces with Jim Lewis over at Wall Street Silver until like 1 o'clock in the morning yesterday, talking about FTX. I got some bloodshot eyes right now, brother. But I envy your rested status.
dude, it's been a long 3 days. So on this CPI, there's two problems. Well, there's one problem here that creates a where it can go. Right around October 20th, the price of RBOB, which is the input for energy for gasoline, went up dramatically over a couple day period. So where they take these numbers is very important on what date. So it could go anywhere from the expected number. Go get there. It
Yep.
can go anywhere from the expected number. Yeah, I'm seeing a route from 8.5 to 7.8, depending on the day they take it. So
Yeah, I can see what you're talking about here. Let me get the candles right and everything, so we can zoom in on the date that you were just talking about here. So gasoline for the month of October, we started the month of October down here around 237. That was gasoline futures. Remember, this isn't the price you're paying at the pump, but it's indicative of the price you're paying at the pump. We're looking for direction here. And what was the date you gave again? We saw a big jump.
17th through about the 22nd. There's several like ups and downs and all arounds.
Yep. We absolutely had some volatility. Now, we spent most of the month higher than we started. And you also have to keep in mind the base effect. We're comparing it to a year ago. Well, the price a year ago in October may have been higher than the price a year ago in September. So it's a moving target. But definitely, I'm expecting energy to have a little bit more of an impact this month than it did last month. I wasn't ready with the RBOB chart. I should have been. But the crude oil chart, if we zoom in here, here's the beginning of October down here. You can see crude oil had a big month in October, right? It bottomed on September 28th. And then we had that big OPEC production cut on October 5th. And that sent oil prices higher for most of the month. They did come down a little bit after the initial shock. But again, they spent most of the month higher. So, and on top of that, you've got home heating oil, which is a big input to CPI also. And the thing going on with the diesel shortage nationwide. So I think energy is going to make more of an impact this month than in previous months.
Yeah, and I think that's a big thing to point out. That's where we get these surprises from. That's all these talking heads are out there talking. But if you don't go actually look at these curves, you can have issues. So I'm sticking to 8.5. I'm probably going to get blown out low, but that's where I think the numbers tell me it should be.
Wow.
Now,
I could
I
tell
put
you
an
an
outlier of
8.5 number,
9.1.
real quick, Mish.
Yeah.
Real quick, an 8.5 number, this market will freak out to the downside on an 8.5 number. That was a pretty bold call Mish just made there, folks. I want to let that one sink in. The market's expecting 7.9. If it comes in that high, oh boy.
I'm down from
That's a big one.
9.1.
Yeah, that's the Mish the moderate. Mish the moderated. He's modding himself right now. All right, Mish, I'll let you finish that thought. I'm sorry I interrupted you.
I don't even know where I was at. Where was I? I was talking about the prices and the.
While you're regaining your bearings, there's another thing I want to point out here, and shout out to the Happy Hawaiian. I think is who turned me onto this one in the last couple of days. The Manheim Used Vehicle Value Index. This is like the average used price of a car across the country. Now, this chart is going all the way back to 1995, but look here in just these last few months of 2022, how quickly used car prices have come back down. I mean, they're falling right now every bit as fast as they rose through 2021. And they rose through 2021 at an ungodly pace. So we're going to see big reductions in the vehicle input to inflation. And vehicles has been one of the big drivers of these higher inflation numbers. So this is going to put downward pressure on the index, while energy, like Mish was just describing, is going to put a lot of upward pressure on the index. Which one will have the greater effect? It's hard to tell. One other thing I would mention is shelter. And I bang the drum on this subject every month, but the government understates the influence of rental increases on the headline inflation number. And just to give you an idea, if we go down here, the index for shelter supposedly has only risen 6.6% year over year, according to the official government statistics. Now, anybody out there who's renting, anybody out there who has a business that pays rent, you probably choked when you see that number, because I guarantee your rent has gone up a whole heck of a lot more than 6.6%. Average rental increases across the country have been closer to 20 and in some cases even 30%. So the rent, there's a lot of built up upward pressure on the CPI. This beach ball has been held underwater, and they have begun to slowly let it rise. You'll notice the index for shelter has been 0.7 the last couple of months. They're finally starting to let that one rise a little bit. But this is the way the government understates inflation, is through owner's equivalent rent. This is over a quarter of the index comes from owner's equivalent rent. And it's the main way that the government understates inflation. And remember, the government is financially incentivized to understate inflation, because a lot of the government's expenses, like increases in Social Security, like SNAP program, veterans benefits, all these programs, entitlements, and benefits they pay out, they're all keyed to inflation. So if they understate inflation, they don't have to pay out as much next year. But remember, inflation gives the government a raise because they typically collect more taxes, especially more capital gains taxes, as asset inflation continues. So the government has a financial incentive to understate, or in some cases outright lie to you about inflation. And I say this every month. I'm going to keep repeating it every month until they stop doing it, which will probably outlast my lifespan. But whatever, we're going to fight the good fight anyway. So we are 3 minutes out.
Talk about real quick. So Tether is trying to lose its peg because of some words out there that Tether and Alameda might be incestuously entwined. So
Mildly put.
Yeah, I like that. So what I was going to say is we need to just look at it real quick.
Yep. So I've got what we're looking at right now is the chart of USDT. This is Tether. This is a stable coin. This is supposed to be $1.00 all the time. And what's going on right now is Tether its peg is weakening. All right. There's weakness. There's being a lot of redemptions, a lot of withdrawals. A lot of people are exchanging their Tether for dollars because there's panic in the crypto markets right now. Keep your eye on this one, because if Tether breaks, if Tether is the next one to flop, this thing is going to go. It will make the FTX collapse look like small potatoes. Tether is the end-all, be-all of crypto collapses. So keep your eye on this one. If we see this story develop further, we'll probably do a spontaneous live stream or something to cover it. But just to give you an idea, we have been here. Oh, it's actually getting a little bit worse now. We've been somewhat in this situation before. Back in May, Tether lost its peg. I believe Tether went as low as 96 at one point. This chart doesn't really do it justice. But we've been here before, and Tether managed to get out of it before it blew up in their face. So we're just going to keep an eye on that story. I want to put that out there that's happening this morning. We are 2 minutes away from the CPI release, and I have to get to one of my good friends, Mark the Stump Grinder's in the house. Where you at, Mark? There he is. Thank you very much, Mark, for the super chat, the support of the channel. Thank you very much. He says, how many melon bucks will this buy? Melon bucks. That is the melon token. That's my new cryptocurrency. Sarcasm. My goodness. I don't want to sick the CFTC on myself. But yeah, Melon Bucks, it's my new token. It's going to change the world. It's the innovation of the future, and it's got all kinds of utility. What utility? Well, we'll get to that later. We'll figure it out. We have our team of developers that's working on it right now. But the important thing is you need to buy as many Melon Bucks as you can get your hands on. That way I can create billions of them out of thin air and then borrow US dollars against them and use those dollars to buy an empire, all at your expense.
Out.
That's what FTX did. That's what he did. So, Mark, thank you very much. This will buy infinite Melon Bucks. And don't worry, folks, I am not starting a crypto Ponzi scheme. And I hear Mish is going. Does that mean the number is out?
Yep, it's coming up right now.
All right, let's see what we got. We are refreshing here. Remember, the market wants to see 0.6 and 7.9. We're going to keep refreshing. I still don't have it showing just yet. It is 830. 7.7. Surprise to the downside. Markets should like that.
Core 6.3.
Core 6.3, and the Fed should like that. So I'm still not showing it on the CPI. Well, here we go. 0.4% headline in October and 7.7% year-over-year headline. Just reading off of the report here, the consumer price index for all urban consumers rose 0.4% in October. That's the month-over-month number on a seasonally adjusted basis. The same increase as in September. The U.S. BLS reported today over the last 12 months, the all items index rose 7.7% before seasonal adjustment. The index for shelter contributed over half of the monthly all items increase, with the indexes for gasoline and food also increasing. The energy index rose 1.8% month over month, as the gasoline and electricity index, good call, Mish, both the natural gas index rose, but the natural gas decreased. The natural gas index decreased. I apologize, folks. It's early and I was up late. The food index increased 0.6% month over month, with the food at home index rising 0.4%. The all items index, less food and energy, rose 0.3% in October. That's your core inflation, after rising 0.6% in September. The indexes for shelter, motor vehicle insurance, recreation, new vehicles, and personal care were among those that increased over the month. Indexes which declined in October included used cars and trucks, medical care, apparel, and airline fares. All right, let's see what got in the numbers here. Here is the 7.7% headline number. Again, I guess we're going to use earnings language. We're going to call that a beat. All right, inflation came in below expectations. You want the number to be lower. So that is a beat for the powers that be.
It's a beat to the low.
It's a beat to the low side. Yep. And 0.4% month over month. We've got 10.9% year over year inflation in food after it was higher last month. So that's increased. That's interesting. We do have an increase. And also keep in mind, a lower inflation number, a lower positive number, that doesn't mean prices went down. That means prices went up slower than they did previously. That's an important distinction you have to keep in mind. Any number in positive territory means the prices went up still. It just means that the rate of increase is slowing a little bit. Food away from home came in at 8.6%. Food at home, 12.4% year over year. That's amazing. That's your grocery bill going up 12.4%. People just shouldn't be expected to live like that.
Hey, Jeff.
The energy index, what do we got, Mish?
Just step in. I just saw a $500 candle on 1 minute on the Dow Jones futures.
All right. Well, let's go look. We did mention how markets were going to probably like this. And, well, I don't know if you can see, but this dotted line over here, the candle hasn't formed yet. But, oh, yeah, the S&P, they're sure liking this right now. S&P futures right now up 94.5 or 2.5%. They were flat a couple of minutes ago. The Dow, there's that big green candle in the Dow, up 663 pre-market or 2%. And the NASDAQ is up 360 or 3.3% pre-market. So I'm right. Once again, folks, I'm going to throw out my disclaimer. Sometimes the market throws us a head fake early on. Sometimes we get these big moves one way or another, only to watch them correct in the ensuing hours, sometimes even minutes. But I'm not surprised by this market reaction. I would expect the market to react positively to this news, because the lower than expected inflation, that takes some of the pressure off the Federal Reserve to stop hiking interest rates so fast. And the market desperately wants the Fed to ease up a little bit. So I would say this market reaction is appropriate. Probably going to see a little bit of a weaker dollar at the moment.
Fixie.
Not really. The
No,
DXY,
correct.
it is
Dollar 10
higher.
cents down $1.10.
You're at a dollar at 110 right now for the
No,
DXY.
I'm at 109.2
Okay.
going south.
For some reason my charts right now they're slow to update. But yeah, I would expect a move down in the Dixie. And right now, let's see, we have got a move down in the Dixie that's sending gold is higher, up 1.2%. We've got silver higher, 2.2%. So markets across the board are liking this news. Let's see what we got in the debt market. We've got yields on the U.S. 10-year Treasury are currently falling at 4.1, down about 4 basis points. Not a huge reaction in the debt market. Stocks, though, look at this Dow number, now up 788 points. So, look, folks, I'm not about to take a victory lap and declare inflation is defeated. We're still 7.7%. That is still, the highest number we've seen since 1982. So, I mean, we're still looking at 40-year highs in inflation, but certainly a move in the right direction. That 7 handle is a big psychological impact. Dow's, wow, 858. We're going to hit 1,000 while we're talking here, Mish.
Oh, yeah.
Again, folks, I just want to caution, we've seen this before where these big candles just instantly reverse. All right. I'm not saying that's going to happen, but I would not be terribly surprised if it did happen. So we're just going to keep that in mind. And I am remiss. I have a couple of super chats that I saw while I was talking here. Let's see. We have got my man, Hector. How's it going, Hector? Thank you, sir, for the support of the channel. It says my car insurance went up 25% and health insurance 50%. Wow. Good thing we made healthcare affordable for everybody, huh? 50% increase in your insurance for next year. Good luck believing what they say today. Well, Hector, I'm sorry that happened to you. And look, increases like that, car insurance and healthcare, right? These are some major expenses in the average person's life. And the rate of increase in these items is certainly higher than the wage increases that we're getting, than the cost of living adjustments and the raises we're getting. So this is coming out of our quality of life. This is life getting harder for people. And I feel for you, Hector. It's happening all over the country to everybody right now. All I can tell you, folks, is adapt. You need to adapt. You need to live cheaper. Otherwise, you're just going to end up going into credit card debt and you're going to come out of this bankrupt. So I'm sorry you have to go through this, Hector. But those who adapt will thrive in this environment, and those who don't will be wiped out. Melonheads, we adapt. We are the ones who adapt. Thank you very much, sir, for the support of the channel. I appreciate that very much. And good luck adapting, I guess. I don't know what else to tell you, brother. I really don't. I'm doing a lot of adaptation myself at the moment. And thank you, Peter. He says, Jack, time to buy more rice and beans. It's always time to buy more rice and beans, Peter. I am bullish rice and beans, not just because they're freaking delicious, but because they have long shelf lives. They're cheap. And, well, my mother-in-law, man, she makes the best Puerto Rican rice and beans. I'm telling you, that stuff, I could eat it by the gallon. I am very bullish rice and beans. I've been talking about rice and beans on the channel a lot. If you're new to the channel, thank you guys for joining us today. I did a video back, I think it was in March, about how to feed a family of 4 for a month for under $100. And rice and beans were obviously the key input there. It gave you all the calories and all the protein you needed for a full month. And I was able to do it for under $100. Then I went back in September and I revisited those numbers, and they were up like 30% just since March. So, I mean, you're huge price increases in rice and beans. And I compared it to everything, to Bitcoin, to the S&P 500, to gold, to silver. Rice and beans have outperformed every asset class imaginable this year. So the big investment story of 2022 is rice and beans. Thank you, Peter. I got a kick out of that one. Thank you for the support of the channel, sir. And Heather Y. Thank you, Heather Y, for the super sticker. Oh, hold on. It is, for some reason, super stickers don't show up on the web version of StreamYard. But I got my man, the pair there, is lifting weights saying keep it up. Well, thank you, Heather. Appreciate that very much. Thank you for the support of the channel, guys. I appreciate the generosity. And right now, have we hit our 1,000 mark yet? We have not quite hit the 1,000 mark, but we're teasing that area. Currently up 778.
Yeah, the H would like to look at metals, please.
Let's see what we've got at metals right now. Let's bring up a gold chart and let's bring up a silver chart. Give me 1 minute. I can't use ad blocker with investing.com. They don't let me do it. So gold right now, yep, big gap up in gold futures. You can see we were down here around 1713, now up 1736. So gold got about a $20 shot out of that one. Currently up 1.39%. Interesting how gold, which is your primary inflation hedge, is reacting strongly to lower inflation. Not what you expect, not what you would typically expect, right? Lower inflation, you'd think the inflation hedge would underperform, but this isn't a free market. This isn't an open market. This is a Fed market. And so when everything comes down to a trade on what the Fed is likely to do, it's no longer about the fundamentals. It's what are these unelected bureaucrats going to do? And these unelected bureaucrats are probably not going to raise interest rates as fast now. And that means interest rates generally makes bonds competition for gold. And so gold likes this news. Lower interest rates is good for gold. Silver having a really good day, up 51%, 2184. This is the best silver has looked in a long time. So big gap up for silver. Metals just liking this one all around. And real quick, I'm going to take a look at oil also. Oil not typically as susceptible to inflation readings. Oil is really more about the cartels. Again, not a free market. Right now, oil also a gap up $1.14 at 86.97 on West Texas Intermediate. By the way, oil markets, keep an eye out. December 4th, I think it is the next big OPEC meeting. We could see another production cut when that happens. The relations between the U.S. and the cartel have not improved in the last month. So we'll keep an eye on that one. The Dow is currently
the bet on a 25 basis point change in Fed policies.
So we're looking at it. They're now betting on a 25 basis point hike or a 50 basis point hike.
50 basis point hike instead of 75.
Yeah, all other things being equal, if the Fed were to come out today, I think this gives them the leverage they need or the leeway they need for that 50 basis point hike.
Go check out the bond market.
Yeah, 50 basis point hike, that's still not good for stocks. It's still not good for investments, right? 50 basis points is a big rate hike. Right now, we're seeing yields are coming down. The 10-year yield is now down 21 basis points.
Getting it?
3.93. Wowza. People are buying up bonds right now.
Sorry about that.
It's okay, Mish. People are really buying up bonds right now. They're buying the middle of the curve, around 3 year to the 10-year, 24, almost 25 basis points on the 3 years. So people are piling into bonds. When you see bond yields going down, folks, that's bond prices going up. That means people are buying bonds right now. Yields and prices are inversely correlated. So I'll be honest with you. I see a low inflation print. It doesn't make me want to run out and buy a bond, but to be honest with you, nothing makes me want to run out and buy a bond. I am inherently distrustful of the government, and IOUs from the government have no appeal to me. So I guess, take what I tell you about bonds with a grain of salt, folks. That's all I can tell you. All right. Dow 800. Looks like we were flirting with the 1,000-point level, but we didn't quite get there. Right now, it looks like this move is sustained. Let's get back into the data points here. Where is it? Okay, this is this month's report. I want to just go down a little bit more through the list. Energy commodities. There you go. Look at these two data points between September and October in the month-over-month number. And Mish, that's what you were talking to before the report came out. You see, we had a negative 4.7% increase a month ago. This time around, a positive 4.4. So, almost an 8-point swing, more than an 8-point swing in energy commodities just over the month, with energy index now at 19.3% year over year. And most of that was gasoline. There's that spike in RBOB that you saw on the chart, Mish. That took us from negative 4.9 to 4, almost a 9-point swing in gasoline. We also had a big jump in fuel. Whoa, look at the jump in fuel oil. Wowza, there's your diesel shortage right there, folks. There's some other people are out there. Some people are going like way to the extreme on the diesel shortage, saying, "Oh, everything's going to blow up in two weeks because we're almost out of diesel." And then some people are out there accusing everybody of chicken littling, saying there is no diesel shortage. Well, look at those numbers, folks. Right now, I'm leaning towards the chicken little, the extremist. We're about to run out of diesel. I'm not saying we are about to run out of diesel, but look at the difference. We went from negative 2.7% on fuel oil, which fuel oil is chemically almost identical to diesel fuel. So just keep that in mind, to 19.8% month over month inflation in diesel. Now, again, this is fuel oil, which is essentially diesel. This will hit everything next month. All right. Diesel fuel is an input to the cost of everything. I don't care what it is. It's grown in a field using a tractor, or it's hauled to a depot on a truck, and then it's shipped around on a train or a boat, and then it goes back on a truck with more diesel to get it to the store. I don't care what it is. Diesel affects its price. And this big jump in fuel oil costs from minus 2% month over month to 19.8% price increase in a month, you better believe that's going to affect some of these other rows in the following reports. That is a huge number right there. Wow. That didn't get nearly enough attention leading into this report. We got to keep an eye on that one. That tells me that there's something there to this diesel story. There's definitely something going on there. Maybe we're not about to run out, but prices are going higher, folks.
A little quick.
What were you going to say, Mitch?
Heads up, the dollar futures have a 108 handle, and the Dow futures are up about 840.
Okay, so you're looking at the dollar futures, and now I understand why my chart was slow to update. You were looking at the futures, which will lead the Dixie. Well, here's the Dixie finally reacting. Look at that big drop in the U.S. dollar index. Folks, lower dollar. This is rocket fuel for asset prices, all right? Because the dollar is the denominator in the fraction. And if the number in the denominator gets lower, that means the value of that fraction is getting bigger. So this is important to watch. This is going to send stocks higher. This is going to send metals higher. This is going to send – actually, this could be what stops the panic in crypto. It probably won't. But this is bullish even for Bitcoin prices. And Bitcoin could really use a break right now with everything going on. So this is very good for asset prices. We're probably looking at a big green day. Again, I got to throw that asterisk out there. We've seen moves like this reverse in the past. So don't go chasing just yet. Although at this moment right now, I am really glad that I covered half of my index shorts yesterday before the market closed. I am really glad I did that. I locked in those profits because the remaining shorts that I have in play are probably not going to be looking so good as soon as the bell rings.
Well, if you want to melt up, this is how you get a melt up.
Yeah. There are some people who are out there calling for melt up. If this triggers the algos and the machines to go start buying, and then other machines see certain thresholds are met and it triggers them to start buying, and then the Moon Bros and the FOMO Bros, they come in and they start buying when they see it, yeah. That could cause a melt up. Now that's stock prices. That's not the economy. I want to separate. The underlying weakness in the economy right now is very real. It's very real, but we're talking about asset prices right now. They don't necessarily have to move in tandem. All right, and who did I miss here? I saw somebody. There was at least one. Thank you, Steve, very much. Mitch, can you make sure I didn't skip anybody? Steve. She says, if markets run higher short term, may be an opportunity to sell some long equity positions before interest rates take full effect in the coming months. Awesome point, Steve. And I like the way you think. So what Steve is talking about, before interest rate hikes take full effect in the coming months, you're going to hear a lot of talk in the future about how interest rates and unemployment and what the Fed is doing, that there is a lag, that there's lagging indicator. The Fed started raising rates back in March. We haven't really seen the spike in unemployment until, probably the next jobs number, right? Yesterday, the big story was Meta was laying off 11,000 people, and Wells Fargo's laying off all their mortgage people. The layoff stories are gaining steam. The job cuts are finally starting to materialize, even though the Fed has been hiking rates now for 8 months? 8 months of consecutive hikes. So a lot of people are very worried that the Fed has already done severe damage to the economy. It just hasn't showed up yet, right? I use the analogy of you take something heavy in the pool and you throw it into the deep end, but you're standing in the shallow end. The wave isn't going to hit you for a while. You've already caused the disturbance, but it doesn't reach you for some time. That's the lagging indicator of the Fed. Or, if you're in the shower and you bump the handle and, you just made the water hot. You know it's coming, but it hasn't hit yet. It doesn't mean you go turn the handle up even hotter, because then it's just going to make the problem worse when it finally gets here. So they're worried. A lot of people, a lot of market analysts are worried that what the Fed has done has already induced the harm, and they want the Fed to stop because they want to wait for that wave to get here, wait for that reaction to arrive. And I think that reaction is going to arrive in a big way over the coming months. So what Steve is describing here in his comment is saying, hey, if the market wants to rip 1,000 points today, or this could start a bear market rally. We could rally 3,000 points over the next week over this, right? If that happens, that's a great opportunity to get out of vulnerable positions at a good price right before that wave gets here and brings us right down. Steve, your head is in the right place. I agree. I'm not doing any selling right now at the moment today. I'm going to sit and I'm going to wait and watch how this plays out because I've seen these moves reverse before. I'm not saying it's definitely going to happen, but I've seen it before, and I wouldn't be surprised to see it again. But that's an awesome comment, Steve, and thank you very much for the support of the channel, sir. Mitch, did I miss anybody?
Nope, you're good.
All right, we are caught up. All right, that is good news.
We haven't talked about OER yet. Have we got to that?
We haven't. We haven't made our way down to OERs. OER, folks, stands for Owner's Equivalent Rent, and that's the one when I told you how the Fed lies to us. Right now, let's just skip a few things. Well, let's keep working at that. We'll get to Owner's Equivalent Rent. Had a big change in utility pipe gas, natural gas service. We went from a positive number to a rather deeply negative number month over month. Natural gas got a lot cheaper because we're in that swing period right now. The storage tanks are full, but the cold hasn't really arrived, although this morning the cold certainly arrived. So I think the natural gas, that's going to end up being a hiccup in the long term. I think that one will go away. New vehicles, smaller increase in new vehicles from 0.7 to 0.4. There's the used vehicle input from negative 1.1 to negative 2.4. So used car prices are coming down, and they are accelerating downward as they come down. So keep an eye on that one.
I'm pretty sure that's the driver on this.
Yeah, I mean, used cars and trucks counts for a couple of percent of the index. I don't have the weighting off the top of my head, but this is a big one. And, a few months ago, used cars and trucks were at like 30, 40% inflation year over year. Now they're at 2 year over year. So a lot of this reduction in car prices is because the vehicle prices are coming down. Now, one of the reasons why they said inflation was transitory for so long was because of the chip shortage driving up car prices. And they thought that once that chip shortage was resolved, the problem would be solved. Well, it didn't really happen that way, or the chip shortage never got resolved. Regardless, the only thing that ultimately made used cars and truck prices come down is people just couldn't afford them anymore. People just could not make the payments on them. So people are driving older cars and people are not buying new cars. And cars are getting repossessed right now. There is a big drop coming in car prices in the coming months. And this is going to show up in bank earnings because a lot of people took out huge loans to buy bloated car prices. They couldn't make the payments when the stimmies went away. Now those cars are getting repoed, and the banks are going to auction off those cars for a whole heck of a lot less than the loans on them. So the banks are going to take big losses in the vehicle space. It's going to drive up borrowing costs even more. It's going to be real expensive to get a car loan. So I hope you like what you're driving, folks. It's a good time to like what you're driving. Because even though the prices are going to come down, I think the loans are going to get more expensive if you're not buying for cash. Good luck to you. Let's see. Apparel is coming down. That's inflation hitting people in the pocketbook. Apparel is one of those discretionary items that people just, they spend less on when times get tight. The shelter index, it did rise. The shelter index is now 0.8% and 6.9% year over year. Now that is up from last month. The shelter index was 6.6%. So they are letting the owner's equivalent rent rise. It is still laughably understated compared to the reality on the ground. But that is some of your upward pressure right now because remember the shelter index, that's a third of the entire CPI calculation. And within the shelter index, the owner's equivalent rent, that's a quarter of the whole calculation. Let me see if I can find what the actual text was about owner's equivalent rent. Let's see.
Well, while you're talking about that, I had a question about M1 in the chat. So when we talk about tightening and raising rates and selling stuff, that's actually what we're talking about is lowering the level of M1 out in circulation, and that will reduce inflation at some point. But the problem is they've put so much money out there in M1 that they're nowhere close to actually getting on top of it.
Right. M1 refers to the money supply. That's one of these Federal Reserve tracking points, the amount of money in circulation. And M1, I believe, is also your base money in circulation. So
M1 is base, M2 is when you start getting into some of the derivatives and loans.
Okay. So when you have base money, that's your bank reserves. Banks can take bank reserves, and then they can actually create M2, broad money. They can create that out of thin air by issuing loans. Well, when you reduce the amount of base money, it gets more expensive for the banks. The banks start demanding higher interest rates, and higher interest rates slows the rate that loans are taken out, because interest rates is the price of money. So you get less debt expansion, less consumer debt expansion, and that reduces the growth in the money supply. And if people are borrowing less, people are spending less. Therefore, the demand for goods and services is reduced. So that's really, quantitative tightening is just about destroying money. It's about making sure there is less money. And if there's less money chasing the same amount of goods and services, the prices will theoretically drop. Now, that's the demand side of things. There's also the supply side. You have to factor things like OPEC is cutting oil production, and Chinese are shutting down the iPhone factory, and all these other issues that are affecting the supply of things, causing shortages. Well, that puts more upward pressure on prices. So the supply side also has to cooperate. Right now, the Fed is only attacking the demand side of things. If the supply side continues to cause problems, it's not going to have the desired effect on prices. Now, the owner's equivalent rent we were talking about, here we go. The rent index rose 0.7% over the month, and the owner's equivalent rent rose 0.6%. The index for lodging away from home, which is basically hotels, that increased 4.9% in October after declining 1% in September. The shelter index was the dominant factor in the monthly increase in the index for all items less food and shelter. That's your core inflation. That was the dominant factor. Other components were a mix of increases and declines. Among the indexes that rose in October was the index for motor vehicle insurance. There you go, Hector. There's your motor vehicle insurance, which rose 1.7%. Well, Hector, they're telling you your insurance only went up 1.7%. So why don't you call up your insurance company, explain that to them, see if you get a better price. Good luck. Sorry, I shouldn't laugh about people's lives getting more difficult. But if you can't laugh about it, what else can you do, folks? It's my dark sense of humor, I guess, whatever. All right, the index for recreation rose 0.7% month over month, following a smaller 0.1% increase. So it's getting more expensive to have fun. That's good, I guess. And the new vehicle index rose 0.4% in October, and personal care rose 0.5%. In contrast, the medical care index fell 0.5% in October. We got to bring Hector's comment back up here. Hold on. Where's Hector's super chat comment? Because Hector, they're disagreeing with you, buddy. You need to call them up and say, CPI said these things should get cheaper. Oh, man, there's a lot of chat going on right now. There's a lot of chat. It's hard for me to find Hector's comment right now. I know you're in here, Hector. Where are you hiding? Where are you, buddy? Somebody play the Jeopardy music in the background. Here we go. All right. So Hector's car insurance went up 25, and his health insurance went up 50. All right, there's your data points from Hector. That's your boots on the ground. Well, according to CPI, Hector, your motor vehicle insurance only went up 1.7. So there appears to be check my math here, 23.3% discrepancy in the datum. 23.3% is more than a modest discrepancy. All right, BLS, explain yourself. And where was the medical one? They said declining for medical? No. Did they really say? The medical care index fell 0.5%. You've got to be kidding me. 0.5%. Well, Hector, we've got a 50.5% discrepancy between your data point and the BLS. And I'll be honest with you, Hector, I am more inclined to agree with you, guy on the internet who I've never met. Thank you, guy on the internet, for your support of the channel. I am more inclined to agree with you than the Bureau of Labor Statistics. Because, Hector, you do not have a history of bold-faced lying and gaslighting the public. The Bureau of Labor Statistics does. So Thanks again, Hector, for your comment. And, that just goes to show you. I mentioned how the government is incentivized to lie to us about inflation. Look at the difference between the numbers they give us and the reality of what we're living with. I mean, that says it all right there, folks. That says it all. Oh, boy. All right, let's take a trip through the indexes real quick and see what we've got going on. Oh, boy. S&P 500 is up 123 or 3.28%, just off the highs of the morning. Dow is up 796, so Dow is just off its highs, but still way up there. And the NASDAQ, 476 higher, or 4.4%. Man, I am glad I took profits in those QQQ puts yesterday. Good God. Should have sold them all. But, hey, this very easily could have gone the other way. DXY, 109.25, down 1.28%. Let's see what the shinies are doing. Gold up 23.55 or 1.35%. We had that big initial candle up. Right now, it doesn't really know where it wants to go. And, we'll see. Are the people over at the JPM trading desk, or are they getting ready for another price smash right now? We'll see. Looks like they've already started the one in silver. Silver was up about 50 cents. Now it's only up 37. Back headed lower, although still up 1.76 for the day at 21.70, which is higher than it's been for some time. Yeah, I would definitely say this is profit taking. And, this is opportunity smashing. We know these are illiquid assets. Silver is a very illiquid market. We know that there are hundreds of ounces of paper that are dumped on the market for every actual ounce of physical that moves around. So I'm not surprised to see big candles in silver right now. Although that COMEX inventory is getting awful low. Ground's getting closer at the COMEX. And if you think there's volatility in the silver space now, that COMEX runs dry. My mouth is watering. I'm salivating just thinking about it. Can't wait to watch the COMEX blow up. I will not shed any tears for the COMEX if that happens. By the way, guys, we have 946 people watching. I just want to say thank you very much. If you're new to the channel, please like and subscribe while you're here. We do this every month for CPI. We also do live streams for GDP releases. We do live streams for Federal Reserve press conferences. And we do our regular weekly live streams on Tuesdays and on Fridays. And Mish and I ended up doing a spontaneous stream yesterday because everything was blowing up in FTX and the crypto space. So, stick around while you're here. It's nice to have you guys. And also, I just want to send a shout out to my Patreon supporters. You guys are awesome. Thank you for everything you do for the channel. I really appreciate it. Had a great talk on our Patreon Zoom call yesterday about where on Exter's pyramid would we put Bitcoin. And I still don't have a good answer. It was really a good thought exercise because it's hard. I mean, Bitcoin technically doesn't have a lot of counterparty risk, but at the same time, look at the way it's behaving right now, the crypto space entirely. Obviously, there's some derivatives exposure there. So let me know in the comments, where would you put Bitcoin on Exter's pyramid? And I want to send a shout out to my man, Devin Brines. What's going on, Devin? He says, talk crude, MFs. Well, you watch your language, Mr. Brine. Let's talk crude. I agree. We should talk crude. Let's bring up the crude oil chart. So right now, crude giving back all its gains. That's interesting. Let's go to a technical chart in crude oil here. Make this a little bigger so you guys can see. All right, so we're looking at a couple of days here right now. Big candle up, and what did I tell you? Watch those candles because they can be volatile, heading right back down. That's pretty interesting. Let's zoom out a little bit on this chart and see where we're at. So let's do like a 1 year chart of crude. And we're going to set the candles to 1 day. All right. So crude oil. First of all, let's draw some lines here. Here's your dumping of the Strategic Petroleum Reserve, right? That's fake. That whole line down, that's fake. That is the Strategic Political Reserve. All right, that's Joe Biden dumping oil on the open market to suppress prices for the benefit of the election, and obviously it worked for him. So that's one thing. Now, September 28th is when the rumor mill started about OPEC cutting production. And, well, now we've got this trend, V bottom, because OPEC cut production by 2 million barrels per day. The net result of the 2 million barrel a day oil production cut, OPEC wasn't hitting their targets as it was, so it was really only about a 500,000 barrel per day cut. We're coming up on another OPEC meeting on December 5th. Personally, I expect another cut just because the diplomatic situation between OPEC and the West has gotten so terrible that I think they'll do it really just to spite the West at this point. I mean, they obviously like higher prices, but they're not happy with us, put it that way. And let's be honest, they hated us to begin with. So I see this upward trend line. I think is probably going to persist for a little while in oil prices. I guess you could say we had something of a breakdown yesterday. You could argue right there. I mean, that's probably where I would have drawn this line yesterday. So we'll see if we pop back up above this. Although right now, I think oil's still going higher, and that's mainly driven by the supply side. Right now, inflation and economic difficulty and recessions, that's generally bearish for oil prices because it reduces demand for oil. But I think all the big problems are on the supply side right now. You got a lot of fuel switching going on in Europe where they're going to be burning more diesel. That's one of the reasons leading to the diesel shortage here in the States right now. They're going to be burning more diesel instead of more natural gas because of the energy situation in Europe. I think energy inflation is coming back big time. We're already starting to see that in these numbers here, right? And I've been saying it on this channel for a month. Energy inflation is going to come back in the fall big time, and nobody's going to see it coming. Well, here we go. All right, look at these month-over-month numbers. We're already turning the corner in inflation in energy. We had negative 5% month-over-month in the energy index overall, then negative 2.1, and now positive 1.8. And it hasn't gotten cold yet, folks. Get ready for more energy inflation. It's coming. Nobody's talking about it, but it's coming. It's coming big time. It's going to bring these numbers higher. Now, the Fed is going to disregard it. They're going to say, well, this volatile food and energy, we're more worried about core inflation. Well, explain that to somebody who's in credit card debt when they try to fill up their gas pump. Same net effect on the consumer, same net effect on the economy. And, the one to watch here, that fuel oil number, oh, God, that number. Like, look at the swing over the last 4 months in fuel oil from negative 11% month over month to positive 19.8%. That's that diesel shortage developing, folks. And fuel oil, diesel, first of all, everybody in the Northeast uses fuel oil to heat their home. Not everybody. I use natural gas. But a lot of people have oil tanks out here. All right. Also, you Canadian folks, I know a lot of folks in rural Canada use home heating oil. That's going to hit you hard this year, this winter. And again, this is your diesel. This is your train fuel. This is your truck fuel. This is your farm tractor fuel. Everything runs on diesel. Everything has a diesel input cost. And since July, we've gone from negative 11 to positive 19.8 in the month-over-month inflation numbers for diesel. You better believe energy inflation is coming back. Devin, thank you, sir, very much for the super chat, for the support of the channel, and for the idea. I think that was a good segment, and thanks very much. So, guys, if you're just joining us, the headline number, 7.7%, was the headline number this year. Certainly not disappointing, less than the market was expecting, and markets are really liking that. Stocks are significantly higher right now.
Beat to the low.
Beat to the low. A beat to the low. I like that. Mish is waxing philosophical on us here. All right, Max Kathman, thank you very much, sir, for the super chat. He says, if markets are forward-looking, doesn't diesel show massive price increases? Oh, yeah, Mike. I'm right. The market's got this one wrong. Let's put it that way. All right. Now, the market isn't thinking diesel. The market is thinking Fed. And as far as stock prices go, the Fed has more control than diesel prices. All right. Diesel's going to take more time to work its way through the data to eventually affect the Fed's decision-making and then affect stocks. So the markets are forward-looking, but they're not forward-looking enough to see this diesel thing coming. This is all about the Fed and all about the dollar right now. But that's a good point. Shouldn't this be reflected? I'm already looking at it. I can tell you I'm already planning. I've got a couple of energy trades in play. I think energy prices are going to rip higher, and I intend to be very well positioned when that happens. Let's just put it that way. Not a financial advisor, not a financial advice. All that standard CYMA stuff. Do your own research and your own DD. And thank you very much, Mike, for the generosity and the support of the channel. I appreciate that, sir. All right, guys, we have been going for close to an hour here, and I hate to wrap it up when we've got over 900 people watching, but we're getting a little long in the tooth. We got the opening bells in about 5 minutes. Just a word of caution, folks. I'm going to throw this out here. I said it a few times on this stream. These big gaps up have a way of filling back down. Right now, I think the market is making the right reaction to this CPI report. I do think this should be bullish for stocks because it indicates a more dovish Fed. But we've seen this in reverse. We've seen this reverse before. It's happened before. I'm not saying it's going to happen again, but it could happen. Don't get caught up between the machines right now. And I want to say thanks real quick to Aaron Levy. Thank you, Aaron. I appreciate that. Or Aaron Levi. I apologize if I mispronounced your name. Would you expect CPI to hit 10% in 1Q23? It's all going to depend on how cold Mother Nature makes things. If we get really cold, if it gets super cold in January or February, then I think in February or March we'll see a 10% plus in the CPI. And do I think we'll see a 10% hit at some point over the course of this winter? Yes. Yes, I do. I think the shelter index is going to keep rising, and I think the energy is going to come in big time. But, you have to keep an eye on things like, that vehicle index. That's going to keep heading lower, and that's going to put downward pressure on it. CPI is a very big, very complex calculation. But if you cornered me and I had to give you an answer, I would say yes, we'll probably see 10% at some point in 2023 in the first quarter. Don't hold me to that, and don't go out and trade that. There is a lot that could happen, right? We could have a peace breakthrough in Eastern Europe, and the pipelines aren't going to get turned on. We blew them up, but things could resolve. Good things could happen. Hey, it's the 2020s. I know good things typically don't really happen, but let's not be too negative. I know it's written right here. It says perma bear on my sleeve. I get it, but hey, let's try to be optimistic. This is me being optimistic. Yay, optimism. Okay. It's time to end the stream when Jack is trying to be optimistic. Thank you, Aaron. I appreciate it very much for your support of the channel. All right. Real quick, thank you to my Patreon supporters. You guys are awesome. Had a great time talking with you last night. Link down below should you feel so inclined. Thank you to my good man, Mish the Mod. Thank you, Mom and Dad. I love you guys. And Mish, anything you want to throw in at the end?
Well, if you can find me in the wild, you get a mark.
All right. Where's Mish? Catch up with Mish. Find him in the wild. And by the way, I got a lot of people were commenting that you and Ninja are roomies now because of the backgrounds. So
yeah. The screen I use is the same he uses.
We're gonna start a reality show, The Real World FinTube. Find out what happens when people stop being polite, start getting real. Ninja, did you drink all my orange juice, Ninja? All right, guys, we're getting a little loopy here. Have an awesome day. Till next time, live small and dream big.